And now to the frenzy over Facebook's IPO, the most anticipated in more than a decade. The Wall Street Journal is reporting that the paperwork could be filed this coming week, and once completed, it could mean as much as $10 billion for the social networking company. Joining us now with the details is Jack Otter, executive editor of CBSMoneyWatch.com. Good morning, Jack.
Good morning. Great to be here.
I feel like we've gotten this tease before. Is it real this time?
Well, we don't know for sure, but the word is that they will file their papers on Wednesday, a so-called S1 form, and which gives us juicy details about how rich everybody's really going to get on this, and some other papers. So I think this is for real. I think it's going to happen.
Why now?
Well, you know, there are a lot of reasons companies raise money. One is if they're in a lot of debt and they need to pay that off. Another is they just need the money to grow. None of those things apply to Facebook. So frankly, you know, it's probably a payoff to these people who've worked very hard. It's not as if Zuckerberg, the CEO, is hurting. But look, he's got engineers, he's got software people who've worked very hard looking for their payday. It's probably going to come this spring.
And how rich are they going to get?
Well, Zuckerberg is at the top of the list. He
Yep.
is expected to be the $20 billion man. That would make him the 23rd richest person on earth. Sheryl Sandberg,
Yep.
who used to work in the Clinton administration,
Yep.
she's the COO. They figure maybe $1 billion, a little more for her. But I think what's kind of cool is more than 1,000 Facebook employees will become millionaires.
Wow. Now, how about the rest of us? Can regular people get in on this IPO? And should they buy stock when it goes public?
Sure, those are good questions I think people really want to know. First of all, you can only get in now by buying a mutual fund that owns Facebook, and that's very diluted. They own a lot of companies, one of them is Facebook. Really, the only way for regular folks is when the IPO happens, and I do not recommend that. It's possible it will skyrocket, but so many people have such high expectations that it's the opposite of IPOs where people really have made a lot of money, like a Google, for instance. People forget this, but in '04, when Google went off, there were negative headlines. The Journal and Businessweek said, oh, Google's going to struggle and so forth. So expectations were low.
Right.
It went off at $85. People were worried. Now it's at $580.
Wow.
It's the opposite with Facebook. Everybody in the world has heard of Facebook. There are no secrets here. So there's going to be so much demand. It might be more like a LinkedIn that supposedly went off at 45, but you couldn't buy it till 83.
Got it. Big story in the financial world. Jack Otter with CBSMoneyWatch.com. Thank you so much.
Great to be here.